Hey guys, good morning, good morning, good morning. This is Greg, and today we have Gtt Communications in front of you on the screen. It's a telecommunication company based out of Virginia, 64% buy rating that Robinhood is giving it on their thing. And what we're going to do is go ahead and highlight it. We are up 1 cent for the day, or positive 0.71%. For the weekly, we're down negative 14 cent, or negative 9.03%. For the month, we're down negative 37 cent, or negative 20.79%. For the 3 months, we're down negative $2.79, or negative 66.43% for the 3 months. And the 1 year, we're down negative $7.51, or negative 84.19%. And for 5 years, we're down negative $14.09, or negative 90.90%. So this thing has been getting beaten down. We obviously know that if you do your research on it, you're going to find that they're in like a lawsuit, class action lawsuit right now. So the stock has been getting beat down quite often over this past year or so. So it's up to you to kind of figure out whether or not you want to get in it. Once again, I'm not a financial advisor, so I'm not going to tell you guys what you should or shouldn't get into. But for me, I've actually entered in. As you can see, my average cost right now is $1.95. Obviously, the share price is way lower than where I got in at, but we bought 300 shares. Portfolio diversity is 5.91%. Today's return is positive $2.97, or positive 0.71%. Total return is obviously negative $162.03, or negative 27.70%, right? So when you're dealing with option contracts and like covered calls or cash secured puts, you need to make sure that you set up your own spreadsheet to keep track of the funds that have been getting paid to you, those premiums that they're paying you. Because what happens is, with the premiums that they're paying you, you take that and you minus it out of what you may be negative or positive on, right? So that's how you really add up your real cost basis. So my average cost, that's what a cost basis is, right? So right now it's saying that my average cost is $195, but in actuality it's not $195. And the reason why is because we have option contracts in play. As you can see, we have a put option contract that I just placed a couple of minutes ago that expires on June 18th that we've collected 13 cents from, right? So if I click on that, this is going to be a cash secured put that I did. And as you can see, average credit per share is 10 cent. GTT break even, 90 cent contract, 3 contracts. Credit received, $30. Today's return, negative 9. Total return, negative 9. Now, why is it saying that I'm negative 9? Well, when it comes to GTT and a lot of these option contracts that move in 5-cent increments, they want you to actually put in at the price of. So as you can see right here, 10 cent was where it was telling us that it wanted to put us in at. So anyway, we got in at the price that it's at, right? So what we want to do is go to our history, and we'll go back one just to show you. Scroll down, and this is our history. We'll click on show more. And as you can see, we'll just start adding up how much money we received from our GTT contracts. And what we'll do is we'll click on zero it out, and we'll go $30 plus $60 plus $130. And let's see if we received anything else. Plus $14. Equals. So what we received, $234 overall for the contracts. And remember what I said, always set up your own spreadsheet. So we have GTT sitting right here in front of you, and actually we own 300 shares of GTT, but we also own 2 option contracts. So we typically like to split everything in between, and so you see the different numbers that we've received for GTT. But anyway, when we apply this to the 300 shares, it puts us at $78.66, right? That we've received for the past 2 months, or positive 13.33% and positive 11.28% right now in terms of May, right? So our new cost basis is actually $1.47, and we'll make sure that we have that added up just right. 21, 22, negative 23, negative 24, right? Yeah. So right now we're at $1.47 in terms of our cost basis, does that mean that we're negative? Well, the answer to that question is yes. We are still negative, just by looking at what GTT is right now, in terms of the price, right? So they're saying that we're negative 159. If we go back over to our spreadsheet and actually click on calculator, we're going to say $78 plus $66 puts us at $144. So we're going to minus that from $159, 159, and we're at negative $15. So it's not as bad as it looks in terms of total return. We're actually negative $15 right now. So the good thing about this particular situation is that we put in for a cash secured put. And what I'll do is to show you how to do it. We'll click on trade GTT option, sell put, and we're going to change it from the expiration date of May 21st because they're not offering us anything that close, but for June 18th, they are. So this is the one that we did, right? As you can see, strike price of $1, you see -3, that represents the 3 contracts that I did. 13 cent times 3 contracts, which would have been $39, but they only did it at 10 cent, which gave us $30, right? So we have an average. So we kind of added it all in. And what this means is, because it's a cash secured put, it means that we are attempting to buy 300 shares of this stock at $1. If it does not go down to $1 or lower by June 18th, our $300 that we put up as collateral to buy will be returned to us, but we've already received the $13 up front. In my case, it was $10, which is $30 up front. They already gave it to us. So we're going to keep that money regardless, right? So we get our $300 back, plus we've already received $30 up front, which means that, hey, that's $330 back that's in our possession, right? So $300 back in our possession, $30 that we received up front. So it also is determined on how many contracts you decide to do. You can do 1 contract, which means you're going to receive $13 up front and you're going to put $100 up as collateral, or you could decide to put up 10 contracts, which will be $1,000 up front, and then you're going to receive 13 times 10, which is going to be $130 up front. So it's up to you on what you decide when it comes to these contracts and how many contracts you want to do. I decided to do 3, but it puts me at 600 shares when it comes to GTT, just in case it does drop down to $1. Now, what we're going to do is click on our trading view platform. As you can see, it's going for 142 right now, up 2 cents for the day, positive 1.43%. And this is the overall overview of the trading view. We have overview, ideas, technicals, financials. Obviously, you scroll down, it shows you, hey, 142 is the price. Last time somebody put an idea was March the 10th. This is our technicals. They believe it's a strong sell. This is the financial information. You can always click on it. So for the ideas, I'm just going to click on what this person is saying and it pops up, right? We can always click on play and see if it played out to what that person said. And truth be told, it did not, because they thought, hey, yeah, it did go down to this area, but has it went up? And the answer to that question is no, it hasn't. It's kind of went sideways and actually trickled down even further. We can exit out of that person's idea. What we could do is click on trade now, which will give you this screen right here. Now, all these lines that you see in front of you are my support and resistance lines. And I also have them set up to be the 52-week highs and 52-week lows. So this is 2020. As you can see, the high for 2020 was $15.76, and the low for 2020 was, we'll click on it, maybe we'll just go around it, maybe $3 and some change, $3.16, somewhere around that range, right? So we're way lower than the 52-week low for 2020 right now. We're lower than that. Now, actually, we're actually closer to where we were, and we're kind of moving forward, 2012. So we're kind of as low as this stock was back in 2012. That's a long time ago. So as you can see, as time went on, this stock kind of trickled up. That's 2013, where we had highs of $7.77. 2014, where we're up at $14.34. 2015, where we're up at $26. 2016, $29, 2017, $47, 2018, $62. That was pretty much the high for this stock. 2019, $43. And then 2020, but we're all the way down here in the $15 range. So it's up to you to kind of figure out exactly what you want to do when it comes to this stock. Once again, I'm not a financial advisor, but if I open the stock up just a little bit more, kind of open the page up, and to kind of figure out what I feel like may happen, then we're going to kind of have to base it off of 2012. So this will be an area of 2012, right? So it's a possibility that we can go all the way down to that 94-cent range. That would be a support area, and it could bounce up. So that's the reason why I decided to do the cash secured put for the 3 contracts at $1, just in case by 18th of June it went down to that range, and then we can kind of average ourselves down. So we can decide whether or not we want to buy more shares as it gets lower, but it's up to us, it's up to you in that case. But kind of want to show you in what direction I felt like it could go. And if we go back to 2012, honestly, and just take a look at it, and I'll open up even more, it's right there. It's right there, and this would be considered a kind of support line and a resistance line. So it could drop down even lower, maybe the 130s, but after that, it's a possibility it's going to jump up. Obviously, we have a long wick right here that dropped it down to about $1.01. So still have a little ways to go. Lipozene actually are going to be putting out their information. It doesn't even have it up there. So we don't know, not Lipozene, but GTT. It doesn't even have their next earnings information. Usually it's sitting right here, but they don't have it. So it's up to you to go to their webpage, kind of look it up and see when they plan on dropping their next earnings information, and just go from there. But anyway, hopefully you guys learned something about doing cash secured puts. Remember, if you decide to do this, you're going to click on sell put, change that expiration date to June 18th. You're going to click on this little positive plus sign, and you're going to click on continue. Contracts, how many contracts you plan on doing. Remember, one contract is equal to 100 shares. So if we click on one, right now, limit price anywhere from 10 to 15. If you put in 0.15, that's going to be 15 cents. You're going to click on, you see you get minimum credit of $15. You're going to click on review order. And as you can see, there it is right there. Minimum credit, $15. Collateral put up is going to be $100. So that $100 is going to be locked up until expiration of June 18th, unless you decide to buy the contract back at a lower cost or a higher cost, depending on what price the shares go up to within that month, right? It could go down, it could go up. So that's up to you. Anyway, once again, if you guys have any questions, always just drop a comment. I'll get back with you within the day or the week. Once again, please like, subscribe, comment on the channel. I'm going to continue to drop content, and you guys have a great day. Bye.